Today we will talk about an interesting mathematical phenomenon known as Benford's Law and explore how it is used by auditors to uncover potential fraud. Benford's Law, also known as the first-digit law, provides valuable insights into the distribution of leading digits in datasets, including accounting data. This seemingly simple principle has proven to be a powerful tool in forensic accounting and auditing. Benford's Law states that in many datasets, the probability of a number having a specific leading digit is not uniform, but rather follows a logarithmic pattern. That means that the leading digit 1 is the most likely to appear, followed by 2, 3, and so on, with 9 being the least likely. You might be wondering how Benford's Law has anything to do with detecting fraud? Well, fraudulent activities often involve artificially generated numbers that do not conform to the statistical distributions of real-world data. When fraudsters manipulate numbers, they tend to unknowingly violate the numeric patterns of Benford's Law. Auditors apply Benford's Law to financial data and other numeric datasets and use it to detect potential fraud. First, the auditors examine the distribution of leading digits in a dataset, such as transaction amounts, invoice values, or expense reports. Next, auditors compare the observed distribution with Benford's Law's distribution. Significant deviations from the expected distribution raise suspicion and warrant further investigation. If certain leading digits are overrepresented or underrepresented compared to what Benford's Law predicts, it suggests that the data might have been manipulated. For instance, an unusually high number of transactions starting with the digit 9 could indicate that transactions were artificially inflated. Auditors then dive deeper into the data to pinpoint the source of these anomalies. This could involve scrutinizing individual transactions, verifying invoices, and cross-referencing with other relevant information. Benford's Law provides auditors with a statistical method to identify potential fraud quickly and efficiently. It doesn't rely on specific knowledge of fraud methods and can highlight anomalies that might go unnoticed through traditional methods. It's important to note that Benford's Law is a tool for identifying numerical anomalies, however, it doesn't definitively prove fraud. There could be legitimate reasons for deviations, such as changes in business practices or other non-fraudulent factors. To summarize, Benford's Law showcases the hidden power of mathematical patterns in the world around us. Its application in fraud detection has transformed the way auditors approach their work, helping them uncover irregularities that might otherwise remain concealed.